All right, what's up, Tycoon? Super excited for today's video. We're taking a look at ARVL, okay? This is a rival group. This was a viewer request, all right? I do these every single week. So if you have any stocks you want to see in the next video, make sure to let me know in the comments below, all right? We're going to go ahead and jump straight into this, and we're going to look at how there's some 900% profit potentials on arrival, okay? We're going to kick it off by saying none of this is financial advice and jump straight into it, okay? The first things we're looking at that have my eyes is these juicy, very big gaps up indicated by these blue lines or blue boxes on the chart. Okay. These fill 90 to 95% of the time historically in the stock market. All right. There always is that 5 to 10% chance that these won't fill. And then you have to take in current, market conditions, right? If you're in a bull market or a bear market, if you're in a bull market cycle, most likely you're going to see those gaps to the upside fill. If you're in a bear market cycle, you're going to see those gaps to the downside fill. Okay. So we are in an official bear market. I'm not looking for any of these gaps to fill anytime soon. But if you've done a lot of fundamental research and you're a big bull on ticker symbol ARVL, there are some really great opportunities, even at the prices that it's trading at currently of about $1.72. Okay. We can look to the second gap up. We see that offers 934%. And if we see, even if we buy right now and hold till the first gap up, that offers 700%. Okay. So, some really amazing potential there, but it could take a year. It could take 5 years, right? We don't know exactly when the next bull market cycle is going to happen. What I do see and I like a lot that has been kind of, um, causing this short-term rally in arrival, okay, is this nice bullish divergence on our chart. Okay. So if we actually zoom in here, right, and look, we can see that the stock is clearly in a downtrend. Okay. We're making a low here, lower low here, lower low here, right? But on the RSI, we're actually creating higher lows. Okay. We have a low here, higher low, higher low. This is what's known as bullish divergence, and it's an indicator that you may see a short-term pop in the near-term future, right? It's not 100% guaranteed, or otherwise we'd all be rich and everyone would be trading stocks for a living, right? But that's what I see and that's what I like. And we did get a very nice bounce off of that bullish divergence trend line. Okay. We see as the price continues to drop lower on our relative strength index, the relative strength is actually increasing, and we bounce off this trend line twice, three, four times, and the fifth time we got a very nice rally once we bounce off of there. Okay. We can look and we can see a nice 54% rally in the past 11 days. We're going to go to the 1 hour chart now and give you guys some entries and exit areas, for trade guidelines. Okay. So remember, none of it's financial advice, but I am going to break it down completely for you guys. And, you're not going to see this type of content anywhere else, right? From a YouTuber, right? What we're going to look at right now, we have a red box. This is a supply zone. This is an area where there is an imbalance of supply, right? Meaning that there is so much more sell orders that it drives the price lower, right? And these green boxes are demand zones, right? These are areas where buyers step into the market, create an imbalance of demand, and send the price higher. Okay. So these are the areas that we're looking at and that we are going to want to pay attention to as traders. Okay. Our first demand zone immediately below is going to be between 155 and about 150. Okay. We can look here and we can see previously in the past week or so, we did come down to this level and try to find some demand. Okay. We consolidated, bounced a little bit, but there was not enough demand, and we pushed down lower into this demand zone down here. Okay. In between $1.37 and $1.28. Now, once we hit this demand zone here, we can see that there's buyers prevalent in the market, and we're having that upward price momentum driving us into there. Okay. And if we zoom in a little bit more, even we can see that this previous demand zone did not act as a demand zone, acted as a supply zone because there was a sell order imbalance and we fell through, right? But what happened, we came up, faced a little bit of resistance twice along that line. We pushed back down, but buyers stepped in the market and drove the price higher. We pulled back, tested this demand zone again, and rallied up. Now we are hitting our supply. Okay. If we look back in the chart data, we can see that every time we've been trading in this $1.91 to $1.80 range, and the price comes in here, there's an imbalance of sell orders driving the price lower, right? We come back up, try to rally back into here, and that sell imbalance pushes it further lower. We come back up again, push lower, come back up again, push lower, right? So what do you have here? You have kind of like a quad top, right? You have 1, 2, 3, 4, 5, days in this area. 5 times we hit this zone before we get the immediate, following sharp sell-off, right? Now that we've come into an area of demand and established demand, we now have 2 demand zones, right, where we have found buyers step into the market. If we do get a pullback in these areas, these are areas to potentially look to go long, right? Other than that, I wouldn't try to enter anything too much. We can see here that we do have a little bit of demand in this area right here. Okay, from here up to about here is where I would say, there's a little bit of demand in the market. All right. So you could look to try to catch some support if we dip down to $1.70 in between $1.64, right? And the way you want to play this strategy and a trade off of this strategy is you would have your stop loss below your demand zone, right? And you would look to enter as close as possible to the bottom of your demand zone as possible and ride that momentum up into your supply zone where most likely we're going to start to see some resistance and sellers come in where you can take your profit at, right? Now, the thing that looked pretty nice, okay, is we had a very nice double bottom with bullish divergence, okay? So it's kind of forming a little bit of an inverse head and shoulders now, okay? If you can look here, right, here's your left shoulder, okay, here's your head now. Whoops. Right, so we have our head, we have our left shoulder, and if we do get a pullback and find demand in this area, okay, that would give us our right shoulder. Okay, do you guys see it now? Left shoulder, head, right shoulder. Okay, so that's what I'm going to be looking for. I'm going to look to see if this rally continues and we head up into supply. Our sellers going to step into the market, right? Or is all of the sell orders going to be wiped out, right? We see that this has already been a valid supply zone, and sellers have keep coming in the market, whether passive or aggressive. And we're going to look to see, all right, are those same sellers going to be in the market, or is this area going to now turn into a demand zone and push us higher up in the chart, up towards $2? Or if we do experience some sellers in here, look for support in this demand zone from $1.70 to $1.63. If we find some demand in that area, that's going to be a very nice inverse head and shoulders pattern setup, and could really offer some juicy opportunities if you are able to catch the catch the bounce off of demand. And then we rally back up into this area, break out past it, right? And potentially head back up to 230 and 240 is where Lee could go if we really get a breakout past 191. So that's mainly all of the things I'm looking at on Arrival, ticker symbol ARVL. So thank you guys for watching. Don't forget to like, comment, subscribe, and let me know the next stock you want to see in the next video.